Hello, everybody. Welcome to Tuesday. The S&P 500 was down just a little bit more than 0.5% today. Seems to mostly be driven by comments that the chairman of the Federal Reserve, Chairman Powell, mentioned today. Really said a lot of the same things. Said that there's no risk-free path. For example, if we lower rates, we could, stimulate more inflation. If we raise rates, we could have more job losses. So at the moment, they're tilting towards, trying to help the jobs market, and that's why we've done this quarter point cut. Although it seemed like in the kind of Q&A portion of the piece today, he wouldn't really commit to, backing another couple rate cuts, which is what the market is expecting right now. Matter of fact, the next meeting in October, right now, the market's at a 91.9% chance of a 0.25% rate cut. So market's going to react, to sensitivity wise, but I don't think that's going to be a big deal. If you look at the overall broad market, it actually did quite well today. So mainly today's sell-off was the big tech stocks. So even though the S&P 500 was down, for example, 0.55%, the equal weight S&P 500 index, there's one of them through Invesco's ticker symbols RSP, and that's where they basically just assign us equal amount to every stock, unlike the normal S&P 500, which is based on how big you are. That equal weight index was actually at 0.12% today. So, the broad market did okay today. Really, this was just a sell-off. I will say, if interest rates are higher, tech companies are a bit more susceptible to that because of their high multiples times earnings, and people want to discount back at different rates. And obviously, if you discount back at a higher rate, that makes today's value less. So that's where rates, sensitivity comes in with the tech stock. So anyway, look forward to being able to see what's going to happen tomorrow. Wouldn't be surprised to see some of the dip buyers coming in. Been pretty consistent, as far as that goes. So we'll see how that plays out. But look forward to talking to you then. Thank you.